Morning, everybody. This is Live Trading Talk with Patrick MontesDeOca. Welcome back after a nice holiday, Martin Luther King holiday here. And if we take a look at the market right away, we are carrying long a silver position and a swing position here, long from 2281. And silver is breaking out 23.47 last, up about 55, 56 cents. Gold is up. We purchased the contract just before the opening here at 18:15.20. We advised all of our traders in our private trading room here to take the signal here that was activated from the daily buy one level of 1813. What I want to do is just simply take a look at some of the headlines that we're dealing with this morning. And primarily, the thing that I believe is making a move in the market here in terms of volatility is the 30-year bond interest rates are going higher. It's they're up to 2.162, up about 2.21%. And if we take a look at the 10-year, it's at 183, up 3.4%. What this means basically is that interest rates are moving up, particularly the short end of the market. The 10-year note is inverted, meaning that interest rates are moving faster short term than the 30-year bond, like the 10-year note. And we look at the yield curve, the 10-30-year yield curve, just to get an idea as an indicator in terms of where the cost of money is going. And, you know, we've been hearing Chairman Powell mention tapering by the end of March. Possibly they're going to finish tapering, and they're going to be taking a look at interest rates. And I think that if you take a look at what's going on with the Dow Jones, down 500 points, and the S&P down 70 points, NASDAQ down 264, but down about 1.5% so far. It's indicating that a rise in interest rates is not really good for the markets, and it's going to put a damper on the economy. Now, this is coming in as crude oil is trading at $87 a barrel for Brent oil, and WTI is trading at 84, close to 84.50. The biggest gain so far today is silver, up 2.29%. And I've been writing about rising interest rates for the past few months, since actually June of last year, when Chairman Powell announced the beginning of tapering. And so far, we are just beginning to see the tapering, but as far as raising interest rates, I think there is a debate. In my opinion, I think that what we'll see, if we'll see a rise in interest rates, is basically them raising one time, maybe potentially 25 basis points, because if they rise more than 25 basis points, which is really just to establish their credibility that they are in control of inflation, or the perception that they're in control of inflation, they have to raise interest rates at least one time. But you can see right away, just with the fear of rising interest rates here, what the markets are going to do here. And they are already beginning to sneeze and catch a cold, and pretty soon they'll have a tantrum fit. That could, see, I believe, the move that they don't want to see, and that is for the stock market to go into a major correction. If you add the Omicron variant and factor in the fear that it's still in the marketplace because of it, China is locking down. They have experienced the first Omicron infection, and they have locked down completely a city in particular where they found this. There are a couple of other factors that I think are playing a part here in interest rates, and basically the other one is the Russia, Belarus to rehearse repelling external attack in joint drills. Russia is threatening basically the Western world for a possible invasion. Moscow, January 18, Reuters. Russia and Belarus will rehearse repelling an external attack when they hold joint military drills in Belarus next month. Both sides said on Tuesday, at a time of acute tensions with the West over neighboring Ukraine. Russian military forces and hardware began arriving in ex-Soviet Belarus on Monday for the Allied Resolve drills to be held near Belarus' western border with NATO members, Poland and Lithuania, and close to its southern flank with Ukraine. I think this is bringing in another element, another potentially black swan that could disrupt the energy markets, and that's the reason why you see crude oil now, near $90 a barrel. If we do see some kind of threat developing further in the Ukraine, we could see crude oil at $100 a barrel and then some, really fast. So what we're getting is a combination of economic factors, political factors, geopolitical factors, and it's shaking the foundation, once again, of supplies into a bottleneck of supplies that we have been facing still for the past year. The situation obviously is building the possibility that the precious metals markets, and in particular the silver market, could literally explode. The silver market is the canary in the gold mine. And if we look at price, basically just in terms of the price discovery, the actual value, I think you're looking at silver as the most undervalued asset in the world. And as we move on with this rhetoric about interest rates and the Feds and they're in control, and the fact of the matter is that the cat is out of the bag. The Feds are not in control of inflation, and it is still uncertain whether this inflation is going to be temporary or not. There is a school of thought building that the fear is not inflation, but deflation. And as far as I'm concerned, that is a fundamental argument that we are dealing with right now as we move into this new level of pricing based on actually just the demand and the short of supplies that we have. If we can get the supply situation in control, obviously it's going to relieve some of this pressure, and I believe we will be able to see at that point a little more clearly whether this is transitory inflation or permanent inflation. The only thing that I know is that once you raise prices, it's very difficult to reduce them again. So I think the type of buy-in mentality that is beginning to focus on precious metals is the solid money behind the potential of what could happen here from pretty much any angle that we're looking at, whether it's in Russia, whether it's in the Middle East, whether it's in Europe. There is a lot of uncertainty in a lot of obscurity in terms of the direction of the markets. And it just feels to me like this is a transition into something else that I believe we have yet to see in terms of bringing us into a new economic system, a new economic level that essentially is a little bit unclear right now, but it is certainly moving in the direction of Bitcoin, in the direction of digital currencies. The question is, our central banks are going to basically introduce their own version of a digital currency. With regards to digital currencies, I believe that it is just a matter of time before the central bankers, particularly here in the US, begins to issue potentially a digital dollar. Now, the question is basically, is this digital dollar that's going to be potentially issued, or any fiat, any other digital currency, is it going to be backed by anything other than government promises? And I think that's going to be the main factor. If we get a digital currency that is backed in some form by gold or silver or a basket of precious metals, real assets behind it, will take leadership in the world currency market. And I think China already is taking the lead. They already have an internal digital yuan that they are using and are preparing for the Olympics that are going to be opening here next month. And the question seems to be whether tourists are going to be able to use that locally, and whether they can take that with them and use it outside of China. It's not clear yet, but obviously China's central bank is ahead of the game. They already are testing a digital yuan. And for all intents and purposes, all they have to say is that it is backed by gold, and they, I believe, will be taking the leadership in terms of a real monetary unit. These are interesting times. Technology is changing the complexion of labor, the complexion of manufacturing on a global scale, on a global basis that is unprecedented. And we have yet to see actually how much technology is going to disrupt our labor force. We saw a major reversal here this morning on silver. And once again, I want to focus on the fact that interest rates going up, it is not bearish for precious metals. And potentially, I think what we're looking at here is, since the crash of 2020 in silver, after the raid attack, you might say, the Reddit attack here early in January of last year, around the same time here, the market entered into a correction, counterintuitive of what everybody was expecting, which was that this is going to break out into a major short squeeze in the market. And although it was temporary, and for those that didn't take your money, obviously you're looking at the market taking it back here and going into a correction that's lasted now, since March or since August of 2020. And what you see here is a breakout going on, huge bottom that's taking place here, and this is just the beginning of what I believe could be a major rally to test this previous highs that we saw here, which is about $30 in silver. Now, the thing about silver is that silver is a frustrating instrument to trade, to say the least. If you've been carrying silver since March, August of 2020, it's been a really challenge, particularly if you have decaying assets such as premium, that it decays basically as time consolidates, unless you're a market maker in that market. But I think even for that matter, if you continue to buy and accumulate at these levels here, it's just a matter of time before we see a major reversion unfolding here that will adjust this anomaly that we have seen in terms of price. That you're looking at $40 at least to test the previous highs that we made back in 2013. Everybody is talking about rising rates being bearish for precious metals here, and if we take a look at the period in 2017-18 when the Feds began to raise interest rates, it actually was the bottom of the metals markets. It was the bottom in silver, and it was the bottom in the gold market. December 4, 2015, I believe, was the first time that the Feds raised interest rates, and we're looking at a market that made a low of 1228. And by July of 16, we saw a high of 1517. And this is when obviously we begin to see a lot of the manipulation in the market, a lot of the price, I believe, central banks controlling the price until the market finally broke out, and the Feds actually reversed the course of rising interest rates to basically where we are right now, which is negative yields. Even if the 10-year note is at 183, you're looking at inflation at 6-7% easily. You're running about a 5% negative yield at least. So interest rates going up is, I believe, actually going to put the bottom in a gold market that needs and silver as well, that needs, in order to break out and accelerate aggressively to the upside. And obviously, the silver market is so compressed in price that could have some spectacular moves. Gold market and the silver market are getting ready, I believe, for a major breakout to the upside. It's been long overweighted, and if we take out here this high here that we're looking at, 1874, obviously the next high would be the 1920 area, and taking these two levels out, we're looking at the market testing the high of 2062. You see here a nice rounding bottom forming, and the market is breaking out. So I wouldn't be a bit surprised that we are going to see a lot of surprises in the silver market here as we move into the first quarter of 2022. Now, what I want to point out to you here is that if you see the silver move early this morning, it captured basically the price momentum turned bullish. It activated a buy trigger from the daily buy level. The weekly average created a bullish price momentum at 22.85, and the low was 22.84.50. When it got up to 22.89 here, it activated a daily buy trigger, and it took out the daily average, the target. The daily target of 23.16 was completed, 23.29 was completed, and the weekly target of 23.49 was completed by making a high of 23.58. Now, it has broken out of the daily by trading above the sell to level, so this level now has become a support, supporting the weekly targets. And the next target in silver to be completed, 23.99 is the next target. Gold completed the first target of 18.18, and you can see it backed off. So this is the energy that the algorithm identifies mathematically, with its colors. The green levels are 50-50 standard deviation. The blue levels are 90 from buy 1, 95% from buy 2. It's come down again and activated a buy trigger in gold, and so that you can actually pick up another contract, which is what we're doing here in gold, and we're going to hold on to it with a maximum dollar stop that you can choose according to your profile, or if you want to be more conservative, use a close below 1812. So we're holding on to 2 gold positions. We're long. This is a day trade. If our targets are completed, we'll take it. 18.18 is the target again once again. 18.24 is the sell 1 daily target. Continue to maintain your core position here long in precious metals that we've been recommending our clients, our traders, our private traders in our Discord private trading room. And I'll see you later this afternoon. Have a great trading day, my friends. Talk to you soon.